The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We need to give a big congratulations to the teams that played yesterday. I think it was really an exciting game. My wife does not like that much sports, but she watched it sometime, and when the game got really close at the end, she got involved with the excitement. And when the guy from North Carolina made that shot, she couldn't believe anybody could make a shot like that. And then a few seconds later, the game was won, and she could see why people. The game was from Philadelphia was where Villanova is, and we took our grandson up there this past few months to see the school, and the history behind it is really quite cool. But I did play against Oscar. I didn't play against him. Our team played against him. He was already gone out of the game by the time I got in. I was only a sophomore, and he was, of course, I was a freshman, and he was a senior. They beat us, I believe, 82-22, and we were ranked, I think, 19th out of 20 in Indiana basketball. But those 2 years he was there at Christmas Addicts High School in Indianapolis, I think they were 55-1, and the only game that they lost, I believe, was four of the players were sick with the flu or something, and they were playing one of the best teams, and they got beat by, I forget, overtime or something. But anyway, it was exciting. But to see Michael Jordan in the game, or at the game yesterday, was also a lot of fun, because I remember watching him play. And I never got to meet Michael, but I did meet Oscar Robertson several times, and I met him just a few years ago here. He was in Tucson at one of the fundraisers. And I went up and said hello to him, and of course he recognized me immediately. No, but it was he's just a really nice guy. I don't know if you guys know this or not, but he gave his kidney to his daughter. She had a very rare kidney disease, and he had to donate. Well, he didn't have to, but he gave his kidney to his daughter, and his comment was if she wanted the other one, she could have had it too. So anyway, just a cool guy, and very, very nice man. One other thing about basketball, since I'm from Indiana and I lived my life around that stuff, John Wooden, the great coach from UCLA that won, I think, 8 out of 10 NCAA championships over a 12-year period or something. And he was from Martinsville, Illinois, and I got to meet him several times. And on his birthday, they would have these big parties in Martinsville, and many of the old players would come by. And those of us in Indiana would go down and just pay tribute to him. Of course, it was a little fundraiser too, but it was a lot of fun. All right, let's get on to the markets, folks. We got a situation going on in the old gold market here. This is gold over the past, what are we looking at here? Last several weeks now, we've gone up and we've taken out, we've matched the high of April 1st, getting up to that 1238 level. We broke the trend line, which people draw. That's a pretty good logical trend line that's there. So if this is really a good market in gold, and I'm not sure yet, because silver's still lagging so badly, and the work that we did on this says that we still got a really good chance, to get down to that 1190 area. That would be an ideal situation, because you'd wipe out all of the early bulls and then would see what's happening. So today will be a pretty critical day, because if we go screaming up above the 1244 level, it's certainly going to get the attention of everybody. And then what I will be doing is trying to make a recommendation to pull back. I was interested in this gold yesterday down at the 61% retracement, just because we had higher bottoms there, and it stayed there for 2 days, between the 3rd and the 4th. of April. So I was assuming that might be a pretty good bottom at that 1216 level. And then all of this happened after the market closed and they reopened, the futures. In the afternoon around 5 o'clock is when it really started, and then we started around 2:30 in the morning. From what I can tell by the charts, that we popped above that line there, and it was pretty easy to look at that if you were watching it on a smaller time frame chart. There was a lot of resistance there at the 1231. That was the 61% retracement. We had the really strong $10 move right into it, and then bada bing, bada boom, and away she went. And so we'll see. It's going to be interesting what happens to gold today, because I am of the assumption that this is not the beginning. But boy, listen, I have to say that I miss a lot of these darn things. So that's the one thing that I want to remember. And we'll see what's happening here with the thing here. We'll go on to the somebody posted the thing about John Wooden. Yeah, he's what a wonderful man he was. He just anybody that ever met that guy was really was really special. That was really for sure. I'm going to talk a little bit more about these expert speaks. Guys that really know some stuff. And, they'll really understand that when you make a prediction on some of these things, you got to remember that you have to take the responsibility. And this is from a quote about Gone with the Wind. He said, "Forget it, Lewis. No Civil War picture has ever made a nickel." And this was when one of the MGM producing directors told Louis B. Mayer that not to film, Gone with the Wind. And Louis B. Mayer, also mentioned in Gold with the Wind, was said that Irving might know a little bit about economics, but he doesn't know anything about pictures. So you got to remember when people say this stuff, it's really quite a big thing to remember. Well, there's just so many things in here that these people have said that are just absolutely unbelievable. It's just really amazing. If there's one in here that's one of my favorites about the. There's some of these are about religion. I'll get to these extra. I just enjoy reading the things that are there. I'm mentioned in the book about 78 times, and that's just this year alone. So we'll see what we have. Okay, we're taking a look at gold. The crude oil, folks. Crude oil is getting really close to the Fisher Cut Bait area. We're down again. We're coming into a 61% retracement of the. Let's say that again. We're coming into a 1.27 expansion of the last swing down. That comes in at 34.50, and the 34.50 also happens to be a 50% correction off of the bottom. So if we watch that, I think that'll give us a pretty good idea that we're looking at something pretty interesting in the crude oil. That's the main thing that I wanted you to mention, or at least to remember. Now we got some really important things. Big time stuff. Mother, God, and country things that are happening, and we talk about those right after the break here.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I want to spend a little bit more time on the gold here. Then we'll go back to the Treasury notes and Treasury bonds. But this is basically another Gartley pattern that we have forming on the sell side, up around this 1238, 1239 level. That completes the ABCD. We still haven't taken out the highs of 1244, which would be that would be a sign that something really big is happening. So just keep in mind here that we want to wait a little bit to put a major position on here on the gold. It's a great scalping market because it does give you a lot of opportunities of $8 or $9 or $10 all of the time as you move through here. Now, let's take a look at the Treasury notes because this is a real interesting one. We are right up very, very close now to the 61% retracement on the move down. You'll notice when we made the top up there, we were making perfect 1.27 and 1.618 expansions. We also had the shooting star pattern that was there that Steve Rhodes talks about quite a bit. And if you'll notice, you'll see several shooting star patterns across the Treasury note chart. There's 1, 2, 3, 4, 5. There's actually 6 of them on this chart that worked pretty good. And now we're going right back into the area of the 61% retracement up there at 131.04. We've been to 131, so it's just a question of if we get there, and then we'll take a look at it from the short side. That would also be a Gartley sell signal from the ABCD that started in early March. So we're really close here in the Treasury note and Treasury bond market, both of them. The number on the bonds, I believe, is 166.10 in that area. So keep an eye on the bonds at that area, and the pattern completes around that time. And we'll see if it's going to turn down from that level. But everything is set up for it. There's no ifs, ands, or buts about it. So we want to watch that. Let's go over to crude oil and take a little look here, because we looked at this yesterday. And we talked about there was support possibly at 35.90, and we went below that by about 50 cents. We're down around around 35.50 right now, and I believe we're going to get down to the 50% retracement, which is that 34.55, and that would be a 1.27 expansion of the low that we made back on March the 14th, and we ran up for 6 days. Then we came down sharply since that time, and that would line us up at around 34.50. So keep a really good eye on that, because below that, then you're looking at 32.02, which is the 61% retracement, and then we'll see what happens. But it's coming down very quietly. I mean, it's not a big panic of any kind, and the oil stocks are, still very, very strong. So there should be some strong support in crude oil for several reasons, and the main reason is the three drive to a bottom pattern that we've had over the past year. I mean, we went from $63 a barrel down to $27 a barrel, and made that three drive to a bottom pattern just about as perfectly as you possibly could, based on cycles and price and time and everything else. So that should be a major bottom. So you want to be looking for a place to be a buyer. Unfortunately, you do not have a clear ABCD pattern since the high was made back on the 18th of March. On the 18th of March. And that's a couple weeks ago. So my assumption is we're probably not going to get one, and maybe it's going to go down forever. I don't know, but the last line of support for me happens to be at that 34.55 level. That's the key level that I think will be the most important to watch in the crude oil. We're having some pretty good action also in the heating oil and gasoline. They're also holding up relatively well on a relative basis. So those are the things that we're watching, very, very closely. Now, I've had a request to take a look at a couple of stocks, and they've been in the news, of course. And the first one we're going to look at is the biotech index. And you'll notice here that you've had some really nice ABCD patterns all along over the last several months. And this is a 4-hour chart, which gives you a chance to look at a daily, going back several months. And you'll notice that we completed this ABCD pattern, taking out the highs of March when everybody got really, bullish on this yesterday. And to me, that means that this thing should start down. That's the way that it looks like. If nothing else, if the trend is in fact, has turned up, you'll get a nice correction, probably of 15 or 20 points in order to buy it, where I wouldn't buy it on a breakout, because I tell you, I have not had very much luck buying breakouts. I know some people do that, but I've not had very much luck. The easiest way for me to do that is to write the check out to the Chicago Mercantile Exchange for the amount of the loss that I'm going to take, and that way I can bypass the commission. So just remember, I am not much of a breakout trader. That's the understatement of the year. Now we have another one to look at here, and that is, if I can find it, and I know I've got it here somewhere because I did a lot of work on it. Where are you? Where are you? I'm going to find you in a minute, you little rascal. Maybe I'm not going to find it. Oh, here it is. I want to do the IWM. That's what it is. Hold on just a second. There we go. Here again, we're going to be looking at the IWM. This is the Russell Small Cap, and we're going to be watching this right here, and you'll be able to see it here. We've made a really nice little three-drive pattern over February and March. We're a little above the 61% retracement. We are certainly still in a downtrend. We had the ABCD down, and then we've had the rally back that succeeded the rally in length and time than we had during September and November, but it still hasn't really gone very far. So this should be an area, because of that three-drive pattern on IWM on a smaller time frame over the past month or so, that should be enough to turn this index down. And we're down quite a bit. We're down 30 handles in the S&P. From a high that we made Sunday night. So something happened over the weekend because it looked like a classical breakout, unless you looked at the New York Stock Exchange Index. And if you looked at the New York Stock Exchange Index, it was certainly telling you that this was not, in fact, a breakout. It was nothing more than a market that was completing a swing up at the 61% retracement. That's all it was really doing. And so far, that's been the thing. Folks, what's happening from just looking at the news and watching the charts, it's 100 stocks that are doing all this. It's the S&P stocks. There are 25 or 50 or so in there. There's 25 NASDAQ stocks, and they're all cap weighted, and all these things are triple digits. Apple, Google, Netflix, all these are, very, very expensive stocks. And then you have, the 30 Dow stocks. And remember, IBM has gone from 112 to 153. And folks, it is setting exactly at the 61% retracement of the last major high. I mean, spot on at 154, and I believe that was the high yesterday. So this is not a time where you want to be loading up on stocks. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and we have a caller from Florida. And Bill, are you there?
I am, Larry. Good morning.
How are you?
I'm great, thank you. How about yourself? And by the way, you are as good as any of the coaches, the famous coaches around the country. You're just in a different segment. That's all, Larry.
Well, thanks for the kind words. I appreciate it. What can I do for you, my friend?
Well, listening to you just a few minutes ago, I know you were saying breakouts. You weren't. It's not really your forte. So it sounds like you have had great success in trading retracements, and maybe you've discovered them to be more predictable. Larry, would I be right in that, or could you talk to us about that?
Yeah. Well, it's based on basically what you got to do if you're going to buy breakouts. What you've got to do is you're going to say, if I buy this breakout, how much am I going to have to risk? Whereas if you're trading and a retracement, you know that if you're going to buy it at the 61% retracement, your risk is going to be to the 78% retracement. Now, another way to handle the breakout is if you buy the breakout and it doesn't continue going in the direction of the breakout, you just flat get out of it. In other words, if you buy it, it starts to work and then it goes back below it, then you just flat get out, because you have to consider it as a false breakout. But that's the way I would handle it.
Larry, have you found that when you get to the 786 retracement, that tends to be a level where you don't generally go much below that, and if you do, you're breaking the
Oh yeah. Yes, that's absolutely true. 786 to me is like the line in the sand, but the line in the sand, the real line in the sand, is the 1.618 number. That's the one that is etched in stone, because that's the one where the chambered nautilus gives the spiral that we see in our universe. It goes out to 1.618, and in our markets the same thing occurs when we get to that 1.618. That's why it was so interesting on the shorter term chart in the gold. Looking at the 15-minute chart, there was a 1.618 expansion there at 1239, and so far, it hasn't taken that out yet. But those are the two: 786 on the downside for contraction and 1.618 for expansions. Those are the ones that are what I call, if you get beyond those levels, you're in no man's land, and you don't want to be in no man's land when you're doing these trades.
But those are the more predictable levels, I would say, Larry, which is great to know, obviously, when you're looking to enter trades.
That's my opinion.
Okay. Terrific. Thank you, Larry. Appreciate it.
Hey, Bill, thank you for calling in, and thanks for the kind words. I certainly appreciate that also.
Well deserved.
Okay, hey, we've got another caller in from Boston this time. I wonder if it's still snowing up there. I understood they had skiing at Fenway Park the other day. Jay, are you there?
Oh, yeah, they could still be skiing if they wanted to. I just
it's going to be about 85 here in Tucson today, so it'll be pretty interesting to see what happens.
Well, we're saving on sunblock and suntan lotion over here, so I'm looking on the bright side.
Good.
But question for you, Shane Smolian yesterday he was great. He sounded to me like he had a real tight correlation with the Fed juice and the market.
Yeah, he's a smart boy. There's no question about it. Well, he's not a boy. He's a young man. He's got a couple beautiful kids. But he does have some interesting things. And, they're available for people if they wanted to figure out how to do it. You just go to the Federal Reserve and see when they start pumping money in. I don't understand the indicator, so I sort of rely on what he's telling me. But you just watch it. I mean, every time they start jumping money in, you can see that the thing just starts to go. And you know what it might be, Jay, is that other people start to see that they're doing something and they just don't want to stand in front of it, so there's less selling on the way up. That could also be it. But it works. That's the flat out.
Yeah.
That's the flat out thing that we're watching.
Yeah. So, do we consider it the Fed juice as RSI? Are we considering it a leading indicator? Or,
Oh, yes, it's definitely a leading indicator because when that thing turns, like he said yesterday, he said that it already started to turn on Friday, and Friday was so far the high. Well, Sunday night was the high, and they weren't doing anything Sunday night because the Fed's not open Sunday night. So you have to assume that was correct.
Yeah. Can people like us subscribe to his service?
Yeah. You just go to www.wolftrader.net. And send in your $10,000 check for each month, and you'll be okay. No, I don't know how much it is. I shouldn't have said that. You'll have to ask him because I really don't know. What it is. I know it's probably very, very reasonable, and that's the main thing.
It looks very tradable. I mean, so just buy the whole market, you think, is the trick to play it when the money starts getting pumped in? By the
Well,
S&P.
that's the way it seems like it. It's based on the S&P, is what Shane said, and he based his things on the S&P cash, and that's certainly, with 500 stocks, you can certainly do it. But the Dow's pretty much the same thing. That's only 30 stocks, and it followed along, also. So you got to use some other things there. You got to use some type of a risk parameter that, if it doesn't work, you've got to decide where you're going to get out. You know what I mean?
Yes.
That's the key to that.
What do you think would be a good tool to use for risk, to gauge risk and jump out if need be?
Well, I would watch the retracement levels. Like if you're at a 78% retracement on the downside, and the market starts going below that, and the Fed is supposed to be juicing and they're not, there's something wrong. And then the other thing that you could look at is when the market, really starts to accelerate. And if you get beyond a 1.618 expansion of a previous swing, that tells you you're in uncharted territory. So you can certainly go a long way. And that's what happened on Friday. We were down 100 points. And then once we started up, we ended up being up 130. So we had a 230-point swing during the Fed juicing. And that's pretty much was the whole day.
Yeah, boy, this is a good one. He's really onto something here, it seems to me. As long as the juicing lasts, the Fed can't do it forever. They haven't always done it, but maybe for the foreseeable they'll be doing this.
Oh, well, I don't know how long it's going to be. This is new over the last 6 years, but who knows how long it's going to be. It might be done now. It might last another 5-6 years. Who knows?
Yeah, time will tell.
But he's a really interesting fellow to have. Oh, he does some fabulous research with the computers and things. He has an Astro computer from that we have from Alfie Lavoie that does all. I mean, it just ask it a question and it'll just tell you the answer to it. If you want to know, what happened during a Mercury retrograde period. And, we're fortunate here because, we have people like Norm Winsky on, and we have another one, Bill Meridian comes on, we have Shane on, and these guys, and Rich Anderson, these guys are pretty good at what they do, and they add to the flavor of TFNN, and that's the beauty of what Tom O'Brien has done for us here.
Yeah, well, and it's the life you've lived where you've gotten to know these people.
Yeah, we've been lucky that way for sure. Hey, thanks a lot, Jay. I really appreciate you calling in.
Sure thing. Thank you.
You bet.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we were talking about IBM a little while ago, and it dropped a couple bucks on the opening. Pretty sure that 61% retracement is going to hold that one, but we'll have to wait and see. We're going to look now at the currencies. We have a real interesting situation occurring in the Swiss franc versus the U.S. dollar. Over the past year, you can see here that we have a big cycle that's in here. It's a 115-day cycle. Those are calendar days, are not trading days. Right now it's 5 days past that cycle point to come down, but we have some patterns that are completing very, very nicely, and it's really struggling to get down to the area too, and that's the 95.48 level in the Swiss franc. That equates to the futures. If you reverse it, the Swiss versus the dollar versus the Swiss, it would be at 115. So you want to keep an eye on that one. But it's got a lot of things that are there. Oh, we've got one of our favorite people has called in long distance from Singapore. William, are you there?
Yes, I am. Good morning, Mr. Pesavento.
Good morning to you, sir. What can we do for you?
Okay, I'm thinking of asking you Apple, AAPL.
Sure.
And, I think I've been hearing, bullish view on Apple. However, based on the, what you have taught, I was thinking that perhaps they have reached the 61.8% retracement yesterday. So would you think that it will have a retracement before it, continue its up move?
Oh, we hit the 61% retracement spot on yesterday at 111.81. I think the high was 112, and it was only there for a few seconds because I had my beeper on there, and it hit that. And you'll notice I posted the chart in for Apple, and as you'll notice, we have lower highs here. Starting way back in July, we had a lower high in August, and now we've had a lower high here again, right at the 61% retracement, and the other high that we had in November that gave us this 61% retracement was a 786. So we're in a downtrend in Apple, And my assumption is, we're probably getting ready to, see a pretty good correction, at least down to probably the 101 level. That's about 10%,
Sure.
from what I'm looking at right now. But it did hit the 61% retracement yesterday, just like IBM did. So maybe both of those will be enough to pull the market down a bit.
So will you think that, after we hit the 101, and then it is possible for it to continue further up move?
Well, sure, anything's possible, but you have to wait and see how it gets to 101. If it gets there really, really fast, like over a period of 3 days, it's telling you that the market is a whole lot weaker. But if it takes 2 or 3 weeks, to get to 101, then, you can say, yes, yeah, we got a pretty good chance. You have to wait for the pattern to complete in order to make some type of a reasonable assessment of, where you're supposed to go.
Okay, so which means let's say if we take a longer period to reach that level, we might see a potential, Gartley pattern forming.
That's correct. That's what you'd like to see over maybe 2 or 3 weeks, to see a nice ABCD structure, because when you have that, you have 3 numbers, to say this is where you want to do. The problem with what we're looking at right now, William, is we're only looking at the one number. That's the 61% retracement of Apple back. So you'd like to have multiple numbers coming together, and that's what you really like to see.
Okay, I got it. Thank you, Mr. Pesavento.
Hey, thank you for calling in, my friend, and may God bless. You bet.
Thank you. Bye.
Okay. All right, we were talking about the Swiss franc, and I wanted to go down to a smaller time frame to take a look at this, because it's got a really clear ABCD pattern here down at that 95.44 level, and right now we're trading 95.72 or so. So we want to watch that level very, very closely, because that could offer a very, very low risk entry, and you want to watch it very closely for the Swiss. And also, we're coming into the yen too. The yen has been under a lot of pressure. It's broken to the downside, and we've taken out that key level at 111. That sets up a 3-drive pattern in the S&P, in the let's just do this one thing at a time. It sets up a 3-drive pattern in the Japanese yen down, considerably lower, down at the 109.35 level. So we want to watch that very closely. So the stocks have opened. We're selling off pretty dramatically so far this morning, and we're going to see if that's going to be an interesting thing. We haven't quite hit the level in the notes yet. I don't know. I'm really surprised. I thought that the notes would be there by now. Let me double check the price here, because we should make that 102 level. Hold on one second. 101.03 level. Where are we at right now? We are at we're not even making new highs. We're still at the we haven't even made 101 yet. So they're lagging behind. So we'll watch to see what happens with this as we go through. The bonds are quite strong. The bonds are much stronger. They've exceeded that 166.10 level that I was looking at. So we'll see what's going to happen, with those, but we'll be watching it very closely. The support in the S&P, as most of you that follow fib numbers, we're down near a 61% retracement of the last swing, but we came down here so fast that we're most probably going to go down to the 786, which is down around the 2022 level. But you should find some pretty good support around 2036. That's a 61% retracement off the swing we did 5 days ago. That's the way that it looks like from the support and resistance area, and that equate. And of course, the Nasdaq is still stronger because it's backing off a lot less. But the number in the S&P, which I know most of you folks look at to trade, that number is around 2036 to watch for a potential good support to come in, and failure there takes you down to 2022. But as we mentioned yesterday, the New York Stock Exchange Index said this was certainly not a breakout to the upside on a bull bull market basis. And so what we would like to do is to see what's going to happen today, and then we will, assess what's going to happen. We did come down 30 handles in between Sunday and Monday. We went from 2071.5 down to the 2040 level. Actually, we got a little bit below that, and then we had a tiny bit of a rally. We rallied about 8 or 9 points between last night and this morning. And of course, we're making new lows right now, so we'll be very mindful of what's going on with this one. So we'll keep a very close eye on that one as we do everything else. Let's get back to the crude oil. We're now trading at $35.44. We are $1 a barrel away from where the fat lady will probably open up the orchestra to sing, because there's going to be 2 major ratios there, 50% off the bottom, and a 1.27 expansion of the low of March the 14th. So that should be a very interesting one. If you look at it microscopically, which I'm not able to do right now, there are some smaller ABCD patterns that measure down into that area, but they are rather small. Each of the CD legs, or the BC swings, are 382. So it's quite interesting whether that's going to be the case or not. So we'll watch it with a keen eye. Let's say it that way and try to change our vernacular here a little bit. Okay, we've got to take another break here, and then we'll be back to wrap up the show.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we were talking about the several markets today. Keep a really close eye on the gold, folks, because we have a situation in the gold market that we could be close to a major breakout. We need to get it above 1244. That would take out the highs of the highs that we had way back in March and February. And we want to see if that will happen, and then we've got a chance for another run. Silver's still lagging quite a bit, so my game plan is to wait and see if we're going to make this 1190 in gold. And maybe that's one of those things. Some of God's greatest gifts are unanswered prayers, so we want to watch it closely. But I'm still looking for a possible 1190 in the gold market. All we've done so far today is make a Gartley sell up there at that 1238 level, and we'll notice if we go below 1229 today, folks, we're trading at 1233 right now. If we go below 1229, that's going to be a false breakout that we talked about with Bill in Jupiter, Florida. And I think that that's one of the things that would give a perfect example of something happened. We're trading at 1233.70 right now. We've had a low of 1230.50 on this pullback, so it's backed off $9 from that 1238 level. But below 1229 would be a false breakout, in my opinion. And remember, opinions are like armpits. Everybody has one, and it usually smells. So be very, very careful. We'll try to have Rich Anderson on. Tomorrow we're going to have our good friend and master astrologer, Norm Winsky from Astro Trends, will be on. And believe me, when he comes on, he has something special. And so don't miss the show tomorrow. Norm will have some really great trading ideas, and he's certainly been spot on with some of these. I tell him that we're certainly not going to keep having him on as long as he's correct. The first time he's wrong, he's history. Actually, that's a little bit of a joke. That's it, folks. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.